Good morning and welcome to the last episode of The Box before we take a short break for the summer. I'm Burnett and I'm a partner in our national insurance team. And for a long time now, I've worked very closely with insurance brokers on risk management issues and the defence of claims. And I'm really pleased to be joined today by our guest speaker, Richard Webb from Manchester Underwriting, as we look to lift the nation after Sunday's disappointment and discuss the challenges of Brokers E&O insurance. And for those of you who haven't joined us before, this session is being recorded. And while you can see us, we can't see you. So we're going to be following the usual format today, where for the first 15 minutes, Richard and I will be looking at the current state of the professional indemnity market and the challenges that brokers face when getting cover, how you can avoid stepping into problems and present as a better risk, and how to insulate your business against gaps in cover. We'll then have time for a Q&A session at the end. So if you have any questions as we run through, please type them into the Q&A box at the bottom of your screen. And my colleague, the Supreme Question Master, Harriet Strevens, will pick them up for us at the end. So just to set the scene for today, for a long time, we've been in a soft market that was driven by an oversupply of capacity, which resulted in increased competition between insurers on price and on scope of cover. And we're now firmly in a hard market cycle. So what's changed? Well, a culmination of events, really, starting with the Lloyd's Review and the Decile 10, which addressed unprofitable classes of business, of which professional indemnity was one. Then we had Brexit, followed by the pandemic, which, leaving aside the challenges that COVID has presented for the insurance market as a whole, these things have all contributed to economic uncertainty, where it's now more difficult for insurers to generate income through investments. And as a result of that, insurers are now more focused on making an underwriting profit. And this has forced unprofitable insurers to exit the market, resulting in reduced capacity and reduced levels of cover. And with less competition between insurers, the cost of insurance is rising. And we're seeing insurers take a far more disciplined approach to claims, only paying those claims that do fall to cover. And as a result of that, we're expecting an increase in the number of uninsured or underinsured claims. And when that happens, insurance brokers are directly in the firing line as a target for E&O claims. So Richard, having set the scene, it's a really difficult time for brokers. And as an insurer, what do you think are the biggest challenges for insurance brokers when they're looking to purchase E&O cover?
You've set the scene very nicely there for me, Liam. I think the first point is brokers have been hit twice. We've gone into a hard market on professional indemnity. It was a soft market for a very long time, around 16, 17 years. The market started to harden, which means that brokers' rates, they didn't harden as sharply as the likes of the construction industry, but they were certainly speeding up before COVID hit. So brokers have seen their premiums move up as people have moved out of the market, as you mentioned. And as their premiums have gone up, the COVID pandemic has come along as well. Brokers are definitely exposed to COVID. And so those insurers that have remained in the Brokers E&O market, they've got to factor in that additional exposure from COVID if they want to offer the cover. So brokers have seen their premiums not just increase in a hard market to actually bring them back to a profitable rate, but also then COVID on top. And I think one thing that's worth bearing in mind, there was an interesting numbers coming out today in an article. There's probably around 2,300 independent brokers in the UK. So these are people out there buying PI. If you rounded that number up and said there's 3,000 brokers in the UK buying PI, say their average premium is 10 grand. Some certainly pay more than that. Some pay a lot less than that. If they're all paying 10 grand and there's 3,000 brokers, that gives you a pot of 30 million pounds. You've got to pay away commission to placing brokers. You've got insurers' own expenses. It doesn't actually leave a big enough pot to actually pay all the claims that are out there. So for PI insurers, Brokers E&O is a higher risk class of business. Now, with the withdrawal of insurers from the market, that's restricting cover. So you're seeing insurers not willing to offer the 5, 10 million limits in the past. In fact, most of us are just looking at offering 2 million, occasionally 5, which means there's definitely a need for excess layers. And there's also the restriction brought about by COVID. Some insurers are willing to offer COVID, other insurers aren't willing to offer COVID cover. And that brings me on to the next point, because the FCA under MIPRU 3.2, it's quite clear. As a broker, if you're offering advice, and that advice is on any particular area of insurance, be it marine, be it business interruption, be it COVID, then your PI policy must cover you for the advice that you give. That's the actual general rule that they're applying. So as a broker, if you haven't got COVID cover, then in fact, that does raise issues for you, potentially with the FCA asking you uncomfortable and awkward questions, and you can't get away from it. And I think added to that as well, there's a lot of unrest with customers at the moment. And at the moment, if you look at the business interruption claims following the FCA test case, over half of those claims that were submitted have yet to receive any payment, even an interim payment. So you've still got a lot of customers, over 20,000, that have yet to receive any interim payment. Those 20,000 customers, they're unhappy, they're going to moan, and they're going to want to complain. And unfortunately for the broker, they are straight in the firing line. And one option for those clients is to be able to go to the FCA and go to the Ombudsman. And the Ombudsman, as we know, they have increased ability now to offer awards up to £355,000, which is quite a sum of money that would come out of the broker's own pocket or from their PI as well. So all of these factors are combining that just makes it even tougher for brokers in what is already a hard market.
That's really interesting, Richard. Thanks for that insight. So I guess from an underwriting perspective, what can you do as a broker to present as a good risk? And what things can you think about and do to avoid stepping into problems when you're buying cover?
Yeah. Firstly, I would suggest to brokers go back to basics. As an underwriter, when I look at a proposal form, I'm building a picture in my head of the risk that I'm looking at. So as you go through the questions and you look at the quality, the way the form has been filled in, are you getting professional, sensible answers, or are you getting a coffee stain and somebody making flippant comments? You want the former, not the latter, because you're building a picture of the risk itself. And then as insurance brokers, you know better than all of your clients about the issue of disclosure, the fact that it's important that you do disclose everything. So your risk management process, you want to make sure you set out clearly what you're doing on risk management, the training, CPD for your staff, the approach that you have. It gives a good understanding to the underwriter about your approach to how you run your business. Added to that, how do you deal with complaints when they come in? Have you had complaints that have gone to the Ombudsman? And it's interesting, during this COVID times, we've seen plenty of notifications coming in relating to COVID, clients wanting to go to the Ombudsman. And it's the quality of the responses that we sometimes see from insurance brokers that actually aren't anywhere near the standard that they need to be. If you're dealing with the Ombudsman, you need to be professional. You need to take out the emotional, personal element. You need to stay very much to the facts. And you need to be able to put forward your argument to the Ombudsman, to the complaint against you, in a very clear, concise way. I think also you need to think about your claims history. Don't be afraid. Your brokers, and particularly during COVID times, you would have seen more circumstances coming in. We've certainly seen those coming through. And I think that's one thing that if you're a broker and you use another broker to place your business, you want to have a conversation with them. If you're a mum insured, we have our helpline, which is provided by Mills and Reeve. Liam, you know yourself as a partner at Mills and Reeve, you get phone calls from our insureds. And one of the questions that will come up, I know from some of our insureds, is whether this is something they need to notify or not. So think about that. When you are completing your form, when you're asking your staff if they're aware of any issues, don't be afraid to raise these things. It's better to raise them than to non-disclose. And as brokers, you definitely know that. And I think the other point, which I'm going to partly swerve, I've mentioned risk management, Liam, but I thought I'd pass that over to you, because one of the big bugbears we find is evidence. It's the lack of evidence that sometimes arises on the proposal form. We want to know that a broker records phone calls, that they always make sure there's a phone note on the file, because it's key on the claims. But that's probably something that you're better covering.
Yeah, well, I agree with all that, Richard. And I think the claims that we tend to see, the ones that are most frustrating to deal with, are where, because mistakes happen, but it's when the basic steps aren't taken. And I suppose in terms of the most common areas where we see mistakes creeping in, the broker fails to ask questions about the business when they secure a new inbound client or at renewal. And as a result of that, they fail to understand the nature of the risk or establish the client's demands and needs. And that can mean that the policy that they obtain isn't suitable, or there are gaps in cover. I think also you've mentioned BI, business interruption, is an area where we tend to see a lot of claims, especially when the broker fails to give adequate advice to then enable the client to make an informed decision about the level of insurance that it needs to purchase or when fixing the length of the indemnity period. We also see a lot of problems arise, though, when there's a failure by the broker to give advice about key policy terms and conditions. So you'll see it a lot, Richard. Policy is sent out by the broker with the schedule, and the client is just expected to read it. Now, when that happens and the policyholder is uninsured or underinsured as a result of not complying with a particular clause in the policy, it's almost inevitable, regardless of what actually happened at the time or what advice was given, but the policyholder will say they weren't aware of the need to comply with that term in order to get their claim paid. This is most frustrating, as you're talking about evidence here, when we get instructed to defend brokers who are highly credible, really competent, and it's absolutely clear when speaking to them that they gave appropriate and the correct advice. The only mistake is the failure to record that advice in writing, either, as you say, in an attendance note following a call, or even better, in a note that then captures the advice that's given, and it's recorded in a way that once that note is sent to the client, it's clear evidence that the client must have understood the advice it received. When there is documentary evidence, it's absolutely invaluable. However, when these issues crop up, and that's not the end of the story, it doesn't automatically mean there are no arguments to raise. And most brokers' claims are fought on causation, quantum, and contributory negligence issues. But in the absence of documentary evidence, inevitably our job becomes much harder. Now, we touched on COVID claims, and I agree with you that it's absolutely crucial for brokers to get comprehensive cover, because bad claims can be brought, and if you need legal representation, then you want your insurer and your insurance policy to cover you against those costs. Having said that, I think that COVID claims against brokers are going to be difficult to get off the ground. Now, between us, Richard, we've already seen a decent number of claims, and you've probably seen more notifications, but they're very fact specific when they stick. And I think generally a claimant will have to establish that a reasonably competent broker would have considered, firstly, the possibility of a pandemic happening such that there was a demand for an insurance solution to meet it. And then secondly, to have considered whether the different non-damage wordings on the market, and then from a view which of those policies might respond to pandemic losses at a time where nobody in the market ever expected those policies to respond in the way that the Supreme Court have now said they do. Causation is an even bigger problem, because claimants are going to have to establish that but for the negligent advice, they would have chosen one of those policies that the Supreme Court has now said provides some element of cover to COVID losses. But in order to address that question, you're really going to have to look at the policy alongside the claimant's drivers at the time and their demands and needs as a whole to look at what decision would they have really made. Now, I'm not saying claims won't be brought, but I think it's a really high bar. But having said that, if you have a choice, you really want to have a policy that protects you against that event. So, Richard, I guess this neatly leads us on to how do you present as a better risk, and how do you insulate against gaps in cover?
That's quite a challenging one in the current environment, Liam. And I think the first one is just, I'll address the COVID. It's a bit of a dull subject in certain respects for insurers. I know we're all sort of to a degree fed up with it. It's part of our lives. There's no getting around it. But I think right now for a broker, if you have the opportunity to buy the cover, you should take the cover. In the last 2 months, I know 3 claims very well, all notified, where the insured has opted to not have COVID cover. Each of those insureds is now facing a COVID claim against them. And there's 2 issues here. One, they've now got to handle that claim themselves. So there's no insurer to assist them, no insurer to pick up the defence costs. And whether those claims are defendable or not, unfortunately for the broker, they're going to have to pay for that themselves. And if they want to defend it, they've got to pay for that themselves. 2 of those claims I know are well into 6 figures, which for them as businesses causes concern. But there's a double whammy here, because the fact that the FCA If the Ombudsman become aware, then they're going to start getting awkward questions from their regulator as to why they didn't take out COVID cover. So if the COVID cover is available to you as a broker, my advice is take it. You need to comply with MeProof 3.2. It's also worth bearing in mind, if you're going to go for larger excess to try and keep your premium down, do that. But don't forget, with MeProof 3.2.14, with the FCA regulations, you're going to have increased capital for any increased excesses. So just bear that in mind. It's another one where if you're not careful, you can suddenly fall foul of the regulator. The other point to put in there is if you used unrated markets. Now, in some areas, it's unavoidable, and not all unrated insurers are bad insurers, but some are not so great. And if you are using them, then you're going to find E&O underwriters are going to be quite wary about insuring you. The simple reason being is unrated insurers, a number of them do not have a great reputation, not just for survival, but even for just paying claims. And it's insurers that don't pay claims create problems for you guys, the brokers, and that means it then flows down the line, and it means it can end up on your own E&O. I think it's important to highlight, as I mentioned before, your risk management, and particularly the evidence point that Liam mentioned, because that can be absolutely key. And I would go back to that first point I made, which is going back to basics, the quality of the presentation. The soft market, everyone got used to filling in one side of A4, literally name, address, and then you'd get a quote. We're in a hard market. The questions are actually the questions that should have always been asked of risks. I'm afraid we've just gone back to doing it all properly. That means when you're filling in your presentation, make sure it's clear, concise, and professionally filled in.
Thanks, Richard. I suppose the final comment I have to make on that, because we often get asked the question by brokers, is whether you should include a limitation of liability clause in your TOBA. Inevitably, you're going to run up against arguments about unfair contract terms and whether the term's enforceable, frankly. But it's much better to have it than to not. Wrapping up there, Richard, thank you. It was a really interesting discussion, and thanks for your insights. I think we do have some questions, Harriet, so I'll hand over to you to put those to us now, if that's okay.
Thank you very much indeed. We do have a couple, and I'm conscious of the time at the moment. This might seem a rather bizarre question given what's just been presented, but the question is, why wouldn't a broker have cover for COVID these days? Richard?
So I'll jump in on that one. I think probably different factors drive different people and how you run your business. If you are very cost conscious for whatever reason, then you're going to get two quotes potentially, one with cover and one without, and the one without the COVID cover will be cheaper. And as a business, you might think that's the route to go. From a FCA point of view, if you don't provide advice on products relating to COVID, then actually there isn't a requirement on you to have COVID cover. The cover you need to have in place is on the advice that you're giving to your clients. I think the problem is, though, for a lot of brokers, there's an awful lot of products in the insurance world that do end up extending out to providing cover for COVID. One of the other points I've had raised by a number of brokers is pretty much all insurance policies now exclude anything to do with pandemics and exclude COVID. That's fine, but that doesn't remove the exposure for yourselves as brokers. There are still clients out there with policies. There are clients right now that are just getting back to trading and assessing their losses for the first time. And as I mentioned before, the business interruption claims following the test case. So there's still a lot of exposure out there for insurers and for brokers as well.
So Liam, do you think this is really a question of training? Should brokers just do it better? Do we need more training in this field?
I think more training and education definitely helps, and I think that comes from the top of the business, and we work with lots of brokers and provide that training directly. It's also about having appropriate procedures and processes in place. Richard and I were talking earlier about most claims. I mean, actually, it's difficult to say how most claims arise, but very often you will see a claim arise where the premium was, a few £100s, and because of that, the broker makes a judgment call about how much effort needs to go in to the proposal and the advice that it gives the client. But actually, none of that changes. There's still a requirement to advise the client on whether the cover is appropriate for its needs and to establish initially what its demands and needs are. But we're all human, and if a broker is going to make a percentage commission on a policy that costs £400–500, they aren't potentially going to spend the amount of time that it needs to give appropriate advice. So there's always a risk around that. So I think processes and procedures are really important to address that.
Thank you for that. Richard, you mentioned earlier on the premiums may not be enough to meet the broker claims. So how does that work in practice in terms of payout?
Yeah, I gave you some numbers earlier on about there's 3,000 brokers out there, and that's a pretty decent number to work from. So even if the average premium was £20,000 across 3,000, you're generating a pot of 60 million, which sounds like a lot of money. The problem for brokers is you are so much more exposed than pretty much every other profession. If you built a brand new building from scratch and the actual cost of building that building, the total contract value was £10 million, the architect's exposure, should that building be fundamentally flawed and so seriously flawed that it had to be knocked down and rebuilt, say the architect or any other professionals involved or the contractor, their probably exposure to an individual claim of £10 million would probably be around £2.5–3 million, depending on their role. And there's a number of them to share it around. The problem for brokers, if your job is to insure that £10 million building and that £10 million building burns down and you've placed the insurance incorrectly, then you are on for £10 million. The exposure, the risk is much, much greater. The other difference also is the architect will be earning a lot more out of that project than you, the broker, will. You'll just probably be earning some commission, whereas the architect could be taking home 5, 7, 10% of the total contract value. So as a class, you are much more exposed. That means for insurers that for you to get a total loss, as in paying out the full limit, that is quite likely. And that's why over the years, you've seen insurers come in, they've ploughed into the insurance broker market, and then they've had some hits, and then they've pulled out. And as we've gone through the soft market, other markets have come along. Now, at Mum, we've worked together with Bieber and also with our capacity provider, and we work very closely with Mills and Reeve. And part of that is we are trying to make sure that we select the right risks, we pick the right insureds, and we try and manage the exposure. But in fact, before COVID, the rates were hardening, but they were hardening to get back to a level that actually would be sustainable and profitable for writing the class. And by profitable, I don't mean everyone's making hay here on the insurance side. I mean, as in it's covering and getting enough premium in to cover the potential exposure. You've then got COVID on top, which just makes it a lot more painful. And the problem with COVID is it's very unknown. I agree with Liam's comments earlier on. I think the problem is we've already seen it, claims against insureds, justified or not, that unfortunately there's a lawyer on the other side and we've got to defend it. You can't just leave it. And unfortunately, it's just not that cheap to defend these things.
So in closing, as we don't have much time now, do you think the Ombudsman is a better option for these claims? Either one of you to answer?
I think it depends. It's the claimant's decision. Of course, I think if it's more suitable because it's not cost bearing, it's an appropriate route to get a determination. And as Richard said, it's really, really important when you're responding to complaints that you set out really, really clearly and succinctly your position in defence of the complaint. And we work with a lot of brokers to achieve that and to get it over the line. I think presented in that way, you stand a much stronger chance of defending or defeating the complaint. But equally, for complainants, it's not cost bearing, it's a free shot, and like most businesses might actually just want to chance their arm and see what outcome they get without having to pay lawyers and expensive solicitors' fees.